Okay, you guys, we're now going to take a look at problem 18.1a on page 874 in the full textbook. Let's read through it. Starts out, Floormate Carpet Company manufactures carpets. Fiber is placed in process in the spinning department, where it is spun into yarn. The output of the spinning department is transferred to the tufting department, where carpet backing is added at the beginning of the process and the process is completed. So only two departments. On October 1st, Floormate Carpet Company had the following inventories. Okay, they have beginning balances and finished goods inventory, work in process inventory for the spinning department, work in process inventory for the tufting department, and what I call raw materials inventory. They're just going with materials. But you guys, you need to realize that all of those are inventory accounts, and inventory accounts are, of course, asset accounts. That's why I generally include the word inventory in the account title so that you make that distinction. They say departmental accounts are maintained for factory overhead, and both have zero balances on October 1st. So what they're saying is, and here you guys, since this is they're producing carpet, it's a large volume of items, or an item that where they're all of the, stumbling over my words, where all the units are the same or similar. That's what I'm trying to say. So they could produce, 1,000 rolls of carpet, all one color, right? And you couldn't tell a difference in the 10th roll they produced versus the 322nd roll they produced. Okay, so if they're producing a large number of identical units, then a process cost system is probably what's best, and that's what we're going to use for this business, as opposed to the job order cost system you saw in the previous problem. But in this process cost system, we'll have, as you've already noticed, work in process by department, and they're mentioning here that you'll also have factory overhead departmental accounts. Manufacturing operations for October are summarized as follows. Okay, we've got materials purchased on account on A. So we're going to debit materials. I'm going to put materials inventory for the amount purchased, which was $84,900. And they were purchased on account, so we'll credit accounts payable. Okay, so far nothing different than what you've already seen. Okay, on B, they tell us materials requisition for use, fiber and carpet backing. Fiber was requisitioned for use by the spinning department, carpet backing by the tufting department. And then they tell us the amount of indirect materials used in each department. Well, you guys, materials going directly into the product itself, we know are called direct materials. In this case, that would be your carpet backing and the fiber. Their cost would become a part of work in process here by department. The indirect materials are not going into the carpet itself. You can maybe think of that as cleaning supplies. So those indirect materials, their cost would be a part of factory overhead. So what we're going to do here on B, we're going to debit work in process spinning department for the direct materials used in that department. That's your fiber, $43,600. And you guys, you'd want to put your debits first. Other than that, it doesn't matter. So the order could be mixed up here. I know I'm going to also debit work in process for the tufting department. For the carpet backing cost, $34,100. And then I'm going to debit factory overhead, spending department. For the indirect materials used in the spending department, $3,200. And then I'm going to debit factory overhead for the tufting department. For the indirect materials used in that department, which were $2,900. Now, all of these materials, you guys, would have to come out of our materials inventory. So that's what we're going to credit here for the total. So what are we doing? We're just recording the movement of materials out of the materials inventory and into work in process or factory overhead. If they were direct materials, they were accounted as a part of work in process for each department. If we were dealing with indirect materials such as cleaning supplies, then we debited factory overhead for each department for their indirect materials. Then we're going to credit the total to the materials inventory account. C is very similar, except instead of dealing with materials, we're dealing with labor. Our direct labor, you probably guessed it already, will be a part of work in process by department. Your indirect labor will be a part of factory overhead by department. I'm just going to copy these down. Okay, so we're going to debit work in process for the spinning department. For the direct labor incurred in the spinning department, $26,300. Okay, direct labor in the tufting department, that's debited to work in process tufting, and that's $17,900. Right, then we're going to debit factory overhead for the spinning department for indirect labor in the spinning department. That could be supervisor salaries, could be cleanup staff, quality control. Anyone that's working in the plant there that is not actively working on producing the carpet. So we're going to debit factory overhead spinning department $12,100. And our indirect labor in the tufting department goes to the factory overhead tufting department account, $11,700. Okay, and then for total labor, we'll credit wages payable. Alright, so our direct labor goes into work in process accounts by department. Our indirect labor goes into factory overhead accounts by department. And then for total labor, we'll credit wages payable. Okay, D, depreciation charged on fixed assets. Well, depreciation would be a part of factory overhead, you guys. So we're going to break it out here by department. Here will be my two accounts to debit, so I'm going to bring those down. Okay, factory overhead spinning department gets debited for $5,300. For the tufting department, it gets debited $3,400. and then we're going to credit accumulated depreciation for the total. What is it, 87? I like to be certain, but yes, there we go, 8,700. The next one's something a little bit different. I think we talked about it though probably a couple chapters back, but expired prepaid factory insurance. Okay, if we're paying our insurance ahead on the factory, as that coverage expires, it becomes insurance expense. Well, insurance expense on the factory would be a part of the cost of factory overhead as well. So on E, getting a little bit repetitive here, isn't it? We're going to debit factory overhead by department, and they're breaking that insurance charge out by department somehow. Maybe by square footage. They're separating it out. Spending department, they're giving them $1,200 of the insurance cost, and they're allocating $1,000 of the insurance cost to the tufting department. Well, one reason for that, and this might not be the case, we don't know, it's just an example problem anyway, but maybe the bill was $2,200, right, which it looks like it was for the month. So they said, okay, the spinning department has 1,200 square feet. The tufting department uses 1,000 square feet, so we'll give spinning department $1,200 of the cost, the tufting department $1,000. There's several ways they could have separated that out, but square footage would be one way. Now we'd credit prepaid insurance. For the total. I'm not even going to check that one. Alright. F. Now here's our applied factory overhead entry. You guys, all of these debits to factory overhead have been for actual cost incurred. Let's go back and look at them. These debits were for indirect materials. That's an actual cost. Cleaning supplies, or Sanders masks, or it may be masked around by the people running the spinning machine so they don't get some lint in their face, right? Any of those costs, any cost of any direct materials cost was included here, and that's an actual cost. Here it's indirect labor, again an actual cost. Up here indirect materials, here indirect labor. Here's our actual depreciation cost by department for the month and insurance. But you guys, all of those costs won't be in as each. Like when the first roll of carpet comes off ready to be sold, we want to sell it right then if we can. The problem is we don't know what all these costs for factory overhead are when that first roll of carpet rolls off in the month of October. We want to sell it on October 1st if we can. So what we have to do is, going into the month, we have to estimate what we think our overhead cost will be. And then we usually divide that by some activity base to get the factory overhead rate. Remember in the last chapter it was machine hours. Here they're not telling us how it's applied, but they're applying overhead to the spinning department, 22,000, and the tufting department 18,700. Okay, applied overhead is what actually gets counted in the cost of the product, not the actual cost. We use the estimate instead so that we can sell the units as soon as they're completed. If we waited on the actual cost to all be in before we price the roll of carpet, then it could be November, middle of November, before we could set a cost to and price a roll of carpet that we produced on October 1st. I hope you see the issue there. Why we're using the estimate in the product cost instead of the actual cost? Well, on October 1st, we don't know the actual cost. but we know we're going to have some overhead cost. So we estimate it, and the applied overhead is what gets included in work in process. So we're going to debit work in process spending for the applied overhead in the spending department, $22,000. Work in process in the tufting department, or they're calling this applied overhead, you guys. It's just an estimate of overhead. And for the tufting department, that's $18,700. Okay, now for applied, our actual overhead went on the books as a debit. Our estimate of overhead, or our applied overhead, was going to go on the books as a credit. You'll see how that works out when we post them to the accounts. We hope the balance is zero, right? We hope our estimate for the month was equal to the actual cost, and we'll be able to see when we post to the accounts if we overestimated or underestimated overhead. The technical term for it is over-applied overhead. That means we estimated too much and included too much overhead in the cost of the product. Under-applied overhead means we underestimated and did not include enough cost in the cost of the product. Both can be a problem. So we're going to credit our factory overhead accounts here. Okay, $22,000 for the spinning department and $18,700 for the tufting department. This is the entry that actually puts the overhead into the cost of the product itself, or into work in process. And the credit to factory overhead is our estimate. We use the estimate in work in process so we can cost finished goods as soon as they're finished, and we don't have to wait on all the actual factory overhead costs to come in. Now, of course, that's a work in process. To use the same term here, it gets better as you go, right? The first month of operations, it would be really tough to make that estimate. Once you've been doing it for 6 years, you can make the estimate fairly accurately, probably. Still an estimate. Things can go wrong. Okay, we'll continue with this problem in the next video. Thanks.